Greetings and welcome to Mentor Mike's Market Movie for Thursday, January 30th, 2014. This is Mentor Mike Bridges coming to you from lovely Los Angeles, California, where it is now just about 3:30 p.m. And let's get started. Now, I'm not going to go through all the other announcements that I've made in my last couple of market movies regarding the trading room and the trading rules that I'm abiding by currently. So if you haven't already seen those, I would urge you to look at the last couple of market movies for Tuesday and Wednesday earlier this week. But I do want to present you again with the no obligation survey. As I have mentioned, I'm planning to reopen the trading room contingent on there being a sufficient amount of interest. This isn't going to happen until the later part of the summer, probably around Labor Day or maybe sooner. So if you are interested in participating, and you're going to have to be a current or a graduate student of Pacific Trading Academy. Members of the public are not invited this time around. But if you're in that category and you'd like to participate in the trading room or plan to be in that category by that time, please let me know that you're interested. Send me an email to mentormike@sbcglobal.net. If you've already expressed your interest, you don't need to do so again. Okay, now let's take a look at what went on today. I had some business out of the office today, and I did a little bit of trading early. But my trading was in the Euro-US dollar because I've got a number of students who are interested in Forex here. So I took these two Forex trades in the Euro and made 148 pips. But I was done by about 6:30, and then that was pretty much all the trading that I was able to get in today. Let's see. Here is a screen capture of the finished chart for the S&P, but as you can see, there were no live trades today. So we're gonna replay it, and this for me is really going to be kind of like my first shot at it. So let's move on to that. And here's our chart, and it's all set up, and we've got the data feed stopped at about 5 a.m. today. And let's begin by taking a quick look at the big picture and see if we can get any kind of idea of what's going on. Hard to say for sure, but it looks like the market has moved down and now is in some sort of sideways consolidation, which suggests a corrective wave. And if that's the case, there would be a pretty good probability that the market is going to break to the downside. In other words, we have an impulse wave, a corrective wave, and the next impulse wave should therefore probably be in the direction of the one that led into it. Now, nothing works 100% of the time. Whoop, pardon me, I'm going to have to get that phone. Actually, I'm not going to have to get it. It's Dow Jones calling to see if I've renewed my subscription to the Wall Street Journal, which I already have. Okay, so it looks like this is probably going to break to the downside. Exactly when that's going to happen is going to be dependent on our technical signals here. So what's going on at the moment? Well, we have essentially a bearish red, white, and blue alignment here, but we are above the long-term parabolic. We've got a little bit of divergence. This histogram that I've added here, by the way, is the difference between these two lines on the higher time frame MACD. So you can see that the price has gone a little bit higher, but the histogram is drifting a little bit lower. So there's a possibility that this thing could turn around, but if it's going to go south, what we want to see is this white MA topping out and giving just a little bit of a downward curvature with the blue still underneath the white. So let's see what happens. We're going to ease into this. Let me bring out my little control panel here. Now these are I'm trying to do this replay in much the same way that we're going to be doing it in the trading room. The emphasis now is going to be not totally on just making the trades, but also the education that goes with it. But we're going to do it in about 15 minutes instead of the 6.5 hours that it takes in real time. All right, let's turn on the data and ease it up a bit. I'm going to put it up to about 20 times normal speed because I don't want it to blow right through our signal. Okay, we're getting a little bit of a drop on the white MA. I want to see that price come down if that's what's going to happen. Or is it going to go up? All right, let's see here. Okay. We do have a little downward curvature on the white. Our blue is still below the white, and the price is right at the blue right now, but looking like it wants to go lower. Now, we don't have any immediate rise of volume here, but we do have it bullish over here on the higher time frame. So we're going to use that as our justification. And let's take a short trade here. Now, notice that our ATR is above 2, so our first target is going to be 8 ticks. And away we go. Aha. Okay, the target got hit, and the price has dropped enough to move the auto stop. Are we going to get anything more out of this? Okay, and we are stopped out, but we picked up 187.50 along the way. And nothing particular going on right now. And right now it's about 5:34 on the replay clock. So if there's any reports out, now's about the time that they'd be affecting the market. And we're breaking to the upside here. We've got some curvature on the MACD, a little flare on the long-term MACD, and we've got rising volume on both sides. So let's get real aggressive here. We don't have a thorough red, white, and blue alignment because the blue hasn't crossed the white yet. So let's run it just a little bit further and see if that's going to be in the cards. Yeah, it's a good thing I waited here. Okay. Whoop. Well, in real time, we would have gotten in before that last spurt up. So we just, unfortunately, wasted probably about 3 or 4 ticks that could have been part of our trade. But I'm going to take the shot at this thing continuing up. You can see we've got a bullish cross now in the MACD, and we clearly have red, white, and blue bullish alignment on our parabolic and moving averages. So let's hope that there's enough left in this to at least hit the first target. Okay, and there it is. We're going to reach target number 2. We're going to have to make a new daily high if we do. Okay, and we did. Okay, so we're using just 2 targets now, and we made it. So we've got 650, And notice, let me pause right here. Notice that during that sell-off, we came and got very close to the S2 level here. Here's our S1, and here's our pivot point. And right now, we've kind of stalled out at the pivot point. So let's see what lies ahead. Actually, let me do something here for you. We like to see how far this move is going to go, because we know that within every parabolic momentum module there will be a highest high or a lowest low. Within this one, for example, this was the highest high. Within this little short one, this was the lowest low. Now, is this the highest high? Maybe, but my inclination is to think that it's not, that the highest high is going to be out here somewhere. But one thing we want to do is see where the areas of resistance are where this thing might ultimately stall out. And one of the ways we do that is by adding the Fibonacci retracement grid. And notice that the 200% retracement of this previous move is almost right exactly at the pivot point. Now, we can unclutter the chart a little bit by removing all of the levels that are lower than that. And we'll see where we end up. Now, our next pivot point is this R1 level, which is up here at the 361.8% retracement. That's the highest Fibonacci retracement on the grid. So if we get up to that level, this market's going to be pretty overbought. We'll see what happens. All right, now let's see what's going to go from here. All right, now that it's dropping a little bit, there's another drawing tool that we can add that might be helpful, and that's our regression channel. We go from the low of this large parabolic module to our current high. Now, as you can see, we've clearly broken out of the regression channel, but I have a feeling that that is not a legitimate breakout. For one thing, if you move this further to the right, you'll see there's a good chance that if we end up out here somewhere, this whole little move is going to be within the channel, because one of the things that happens is as it goes higher and it zigzags around, the channel gets wider, the standard deviations grow. So I think that this is not really a legitimate breakout, but we'll see. I'm keeping the cursor on the pause button here so we can shut down if we need to take a look at something. Okay, now look, we have flipped the parabolic. The blue is approaching the white, but the white is still rising pretty steeply, and we don't have a cross on the MACD yet. So let's see what happens. Now, are we at the highest high? Yes, we are. Okay, so we continue on. Okay, now we do have a red, white, and blue bearish alignment technically, but again, this white, I call it the directional MA. And you'll recall that over here where we went short, we were waiting for it to peak and start to droop down a little bit. This one has to do the same thing. It has to peak and show us that it's starting to curve down a little bit. Because oftentimes what happens is the price will break through it initially, and then it'll kind of futz around underneath. And when it's genuinely ready to drop, by that point, you'll start to see some curvature. Until then, it could come undone, and this one could come undone as well. So let's run the data a little slower and see what happens here. Whoops. After that, I crank it up to full speed. Okay, we'll put it about 30 times. Okay, it's dropping, but here's another thing. Notice that our lower Donchian channel is pretty far away, whereas over here it wasn't that far away. And ultimately the move pushed the Donchian channel lower. Here the Donchian channel is still rising, and our price has a good deal of distance to cover before it even reaches it. One of the things that the Donchian channel does is it shows us, it kind of encapsulates the total move. And remember, our white MA is the backbone of the Donchian channel. So here we can see we bottom out, channel's bottomed out, and we break to the upside. We start pushing the upper channel up. We flatten out, come down a little bit, break to the upside. Flatten out, come down a little bit, break to the upside. Break to the upside again, break to the downside, break to the upside. There's no breaking to the downside here yet. We're nowhere near doing that. So let's just see. Check it out. The white never really drooped. Now we've turned around and we're starting to head up again. Are we going to sustain that? Got some drooping volume now. Our white MA is still kind of rising. It hasn't really flattened out. Okay, now we've got red below the two MAs, but blue is still under the white. And we've got a double dose of resistance above our price here. Notice if I drag the regression channel over to our last bar here, this whole swing fits within it, which suggests that our high could be out here somewhere. But this is still the highest high, so that's where we'll leave it for now. Okay, we've broken that resistance level, and we've got blue above white. We've almost got a crossover. We've got a little teeny droop on the volume, still rising over on this side. And the longer term MACD is flaring up. So I say we take a shot at this. And let's get long. Come on. Now the white's drooping, but the blue is rising. Well, price is in the money. It's above our entry. Oh, and there we go. And if we move the guide on the regression channel to the highest high, you can see that we're all within the channel now. This thing going to go higher still? Once again, our second target is at a new high, and boom, we took it out. Alright, I'm going to remove this now. And look at where we're ending up, close to the R1 and the 361.8 level. Now, are we going to blow through that? Chances are a little more remote that that's going to happen. This is the last entry on the Fibonacci grid for a good reason, because it's fairly rare that the price retraces more than that, but anything's possible. Okay, now we made a new high, surpassed the R1, but we're still sticking close to that 361.8. That price over there, $1,112.50, remember, is net of a $9 per contract transaction cost, which is approximately the transaction cost that I'd be dealing with if I were participating in the World Cup Championship. That's about 50% higher than my normal transaction cost, but we have to see if our technique will work under those circumstances. So far, it's looking pretty good. Okay, and as soon as we flip the parabolic, we have red, white, and blue. There's the red up there, white and blue, and notice that this drop is quite a bit different than this one, because our lower notching channel is right there where the price is. It's already come down and touched it, whereas here we never got close to it. Eventually it came to that level, but we've got a MACD cross here. We've got a little bit of a curvature here. Drooping volume here, but it's still rising on the longer term. So again, we'll use that as our basis for volume, and the likelihood that this is a robust area of resistance is very strong. Not only are we at a pivot point, but we're at the 361.8 retracement. So bottom line, let's get short. And now, some of you would be tempted to move the stop to the parabolic, but I want to have a little more freedom to see what happens. I feel a little constrained if I move it that close. So I'm going to leave it where it is. And we've got the phone ringing again. Hang on. Okay, we're back. And let's start the data again. Now we finally broke that support level and pushed that Donchian channel down. And there's our first target and the auto stop. Can't lose now. We've created a free trade. Okay, we flipped the parabolic. And there's the red, white, and blue. Here's the problem. How do we look over here? Can't really tell from here. MACD is pretty neutral, but I'm obviously bullish because the oscillator line's above the signal line. It's nowhere near close to a crossover. But at the same time, this one is not close to a bullish crossover. We got quite a gap here. Generally, you'll see that, I mean, even here when we crossed it, we had a little bit of a cross here. So the fact that we're this far away suggests that this could go lower. From an Elliott wave standpoint, what have we got going on here? This was pretty flat and then we broke away. So this could be some kind of flat, narrow, bullish pattern. And then we have some kind of A, B, C, D, E, five-wave consolidation followed by 1, 2, 3, 4. Now, the temptation here is to think that, okay, this is wave 3, this is wave 4, therefore wave 5 is going to go up. There is such a thing as a truncated wave 5, but they're fairly rare. But what this could be is a more complex wave 4. One of the mistakes that I have made more than once, I'm embarrassed to say, is that I have a tendency to underestimate the size of corrective waves. And even though it looks like this one wants to go up, I wouldn't be surprised if there was another down move before there is an up move, based in part by this big MACD here. So let's just kind of ease this a little further and see how things materialize. Okay, price is kind of dropping. Even though blue's above white, white's kind of flat. Okay, well, I'll tell you what. This still looks pretty bullish over here. We got a long ways to go over here. We do have red, white, and blue, and we're at a point where if we break, we have a little bit of a sort of trend line created here. Notice how the price is sloped down. But we're poised right here to move higher. I'm going to take a shot at this. We've got a pretty good little cushion here. So I think we'll still finish in the money even if I have to pull the plug on this one. Let's just see. We do have an 8-tick target, which is a bit of a challenge, but let's see what we can do. Boom. Ah, made it. Is it going to take off? It's pushing the Dacia higher. Are we going to make a new high? Seem to be stalling out at the R1 level there. Can you see? Here's our R1 line right here. It's just right below that 361. Well, we've got our target in the way. I don't know if this plans to go higher or what, but right now the replay clock is at 12:27. So whenever this, if we go past 12:30, my usual rule would be not to begin another trade. So let's just see how this plays out. Okay, we're past 12:30. Okay, the stop is filled. It's 12:39. This would be it for the day. I'll run it out to the end. Okay, we flip the parabolic again. And there's a red, white, and blue bearish alignment. The white is still kind of sloping up, but the MACD never crossed here and is now heading down. But it's also 12:54, so this would not be a trade that I would take, since I plan to be out at the latest by 1:14. Now the 281 or 261.8 acted as a support zone. Now you can see some curvature on the white, and there it drops quite a bit more. So if we'd gotten in about there, we probably would have hit the first target. But that's pretty much it for the day. Okay, so we had 1, 2, 3, 4, 5 trades, and a respectable score of 1,487.50, and again, that is net of $9 per contract. Each one of these trades was just 3 contracts and 2 targets, and the targets were based on our average true range. So if this looks good to you and you want to be able to do this by my side, come and be my student and join me in the trading room when we start up again after Labor Day. All right, come back and see us again real soon. Bye-bye for now.